Hello there, today we will be discussing the recent banking turmoil and its causes. Bank run happens when a bank can't meet the demand of the depositors. In March 2023, Silicon Valley Bank, which was ranked number 16 in the US in terms of the asset, collapsed and was taken over by the FDIC. Few other banks like Silvergate, Signature Bank and potentially First Republic are also suffering. Now let's look at what caused the bank run as SVB. During year 2020, when the Federal Reserve reduced the interest rate to near 0%, all the US banks had ample liquidity. But instead of lending out the money, SVB invested majority of the liquidity into the bonds because the loan demand was low due to weak economic recovery. Fast forward to 2 years later, the Fed is raising rate aggressively to control the inflation, causing bonds to suffer losses in the current market. This caused SVB to face significant investment losses, making it one of the worst in terms of the adjusted capital ratios in Q4 2022. But here's the thing, although those bonds are majority risk-free, where you can get back the principals upon the maturities, depositors can't wait until the maturity to get the money back. If SVB wanted to sell its assets, which were mainly held to maturity, it will suffer 15 billion losses in the bank's latest annual reports in year 2022. To make matters worse, SVB had most of the funds from the tech and also early stage venture capital firms, which are less sticky compared to the traditional deposits. With the winter wave in tech companies coupled with higher interest rates, tech companies started to withdraw their money from the SVB to meet their daily needs. So with all these pressing liabilities and no immediate liquidity, a bank run happened at SVB. Fortunately, a few days later, FDIC guaranteed all the deposits in the SVB, which are good news for the depositors. That's 2 minutes. Feel free to subscribe, like, and stay tuned for more.